The Vietnamese gold market has entered uncharted territory, shattering records and capturing the nation's attention. As of Saturday, September 6, 2025, the price for a single tael of a Saigon Jewelry Company gold bar soared to an astonishing new high of 135.4 million dong. This figure, which is equivalent to about $5,128.79, marks a dramatic peak in a rally that's been building momentum throughout the year. The recent gains actually extend a remarkable winning streak, with prices climbing for 11 consecutive sessions, signaling, some really intense and sustained market pressure. This is not just a minor fluctuation, it actually represents a fundamental shift in the valuation of the precious metal within the country's economy. To truly grasp the magnitude of this surge, you have to look back to the beginning of the year. In January 2025, the same SJC gold tael was priced at a much more modest 84.2 million dong. The leap to 135.4 million in just over 8 months represents a staggering 60.8% increase, a rate of appreciation that's rarely seen in any asset class. This rapid climb has significantly outpaced other forms of investment, turning gold into the most talked about financial story of the year. The sheer velocity of the price increase has left both seasoned investors and everyday citizens in awe, scrambling to understand the forces driving this golden fever and what it means for their savings and the broader economy. What makes Vietnam's situation particularly noteworthy is how its domestic market has diverged from international trends. While global gold prices have also experienced a strong rally, their growth has been considerably more restrained. Over the same period that saw Vietnamese prices jump by over 60%, global bullion prices increased by a respectable but comparatively smaller 37%. This has created a massive price disparity. A tael of gold in Vietnam now costs nearly 21 million dong more than it does on the world market. This significant premium highlights unique local factors that are amplifying the global trend, creating a distinct and highly volatile market environment within Vietnam's borders. The rally is not confined to the iconic SJC bars alone. Other forms of the precious metal, like gold rings, have also reached new peaks, with prices climbing to 130.2 million dong per tael. This broad-based increase indicates that the demand is not just for a specific type of investment-grade bullion, but really for gold in all its popular forms. The consistent upward trend from 124 million in mid-August to over 135 million just a few weeks later illustrates an accelerating momentum. It paints a clear picture of a market in the grips of an extraordinary bull run, fueled by a complex mix of economic conditions, policy changes, and deeply ingrained cultural attitudes toward the yellow metal. The dramatic escalation in Vietnam's gold prices is not the result of a single cause but rather a perfect storm of interconnected factors. At the forefront is overwhelming consumer demand. In Vietnamese culture, gold is much more than a mere commodity. It's a traditional store of wealth, a hedge against inflation, and a symbol of security. As global economic uncertainties mount, including weak U.S. jobs data and geopolitical tensions, many Vietnamese are turning to the timeless safety of gold. This flight to safety has been intensified by the metal's strong performance, creating a feedback loop where rising prices attract even more buyers, further fueling the rally and tightening the available supply. This intense local demand is colliding with a significant supply-demand imbalance. For years, the domestic supply of gold has been tightly controlled, leading to a market that cannot easily respond to sudden spikes in buying interest. Experts have repeatedly pointed out that the limited local supply is a primary driver of the high premium over global prices. Even though the State Bank of Vietnam has conducted stabilization sales of SJC gold bars to cool the market, these interventions are widely seen as temporary fixes. They fail to address the core structural issue, a chronic shortage of physical gold available for purchase, which inevitably pushes prices higher whenever public demand surges. Adding another layer of complexity are recent monumental shifts in government policy. In a landmark decision on August 27, 2025, the government officially ended the decade-long state monopoly on gold bullion production and trade. This monopoly, held exclusively by SJC since 2012, was a defining feature of the market. The move to a new licensing regime, which allows qualified businesses and banks to import and produce bullion, is a historic change intended to increase competition and align domestic prices more closely with international rates. However, the immediate effect has been one of market uncertainty, as participants adjust to the new rules and their long-term implications. The psychology of the market has also played a crucial role. As prices began their steep ascent, a sense of urgency, often described as fear of missing out, swept through the population. Instead of taking profits, many existing gold holders are choosing to hold on to their assets, anticipating even higher prices in the future. This behavior further constricts the already tight supply, creating a seller's market where buyers must compete fiercely for the limited gold available. This collective belief in gold's continued appreciation has become a self-fulfilling prophecy, propelling the price to one record high after another in a frenzy of buying activity. The statistical charts and economic analyses come to life on the streets of Vietnam's major cities. On Friday, September 5th, as prices breached yet another record, long queues began to form outside prominent gold shops. Citizens from all walks of life, retirees, office workers, and small business owners were seen waiting patiently for hours, all with the singular goal of converting their dong into the perceived safety of gold. These scenes are a powerful visual testament to the deep-seated trust the Vietnamese people place in the precious metal. In times of economic volatility, when other assets seem risky, gold is viewed as a reliable anchor for personal wealth, a tangible asset that can be held and trusted. This rush to buy is a clear indicator of public sentiment. For many, the decision is not just a financial calculation but an emotional one, rooted in generations of experience. Gold has historically served as a shield against currency devaluation and economic instability in Vietnam. This cultural memory is a powerful motivator, especially when the domestic currency shows signs of weakness, or when global economic news appears grim. The current rally has only reinforced this belief, transforming gold from a simple investment into the ultimate safe haven asset in the public consciousness. People are not just buying a commodity, they are buying peace of mind for an uncertain future. The behavior of buyers and sellers further illustrates the market's current dynamic. While the queues to buy are long, the lines to sell are conspicuously short. This indicates a strong consensus among current gold owners that the price rally is far from over. Rather than cashing in on their substantial gains, they are holding on, anticipating that the value of their holdings will continue to climb. This collective decision to hoard the metal effectively removes a significant amount of supply from the market, exacerbating the shortage and putting upward pressure on prices for those still looking to buy. It's a classic market squeeze, driven by widespread confidence in gold's upward trajectory. The government's recent policy changes have added a new dimension to this public behavior. The end of the SJC monopoly has been interpreted by many as a signal that the market will become more open and liquid in the long run. While this could eventually lead to lower prices, the short-term effect has been a surge in activity as investors position themselves for the new era. The introduction of a new licensing system, allowing 38 entities to trade gold bars, is seen as a positive step, yet the immediate market reaction has been one of heightened excitement and speculative buying, further contributing to the feverish atmosphere seen in the queues across the country. Looking forward, the trajectory of gold prices in Vietnam hinges on the real-world impact of the government's sweeping policy reforms. The dismantling of SJC's decade-long monopoly is the most significant change, designed to foster competition and increase the supply of gold. Under the new regime, qualified businesses with at least 1 trillion dong in capital and banks with 50 trillion can now apply for licenses to import, export, and produce bullion. The critical question is how quickly these newly authorized entities can begin operations and start importing gold. If they can successfully increase the domestic supply, it should theoretically help narrow the enormous gap between local and international prices. However, the path to market equilibrium is unlikely to be smooth or immediate. The initial market response to the policy shift has been more uncertainty and speculative buying, not less. The effectiveness of the new framework will depend on its implementation and the willingness of licensed businesses to actively import gold. Furthermore, the government has other tools at its disposal. The Ministry of Finance has already proposed removing the 1% export tax on gold jewelry to support manufacturers struggling with high raw material costs. Such measures, combined with the new licensing system, signal a clear intent to stabilize and modernize the market. But their success remains to be seen. global economic factors will continue to exert a powerful influence. The rally in international gold prices, which recently hit a record high of nearly $3,600 per ounce, has been a major tailwind for the Vietnamese market. This global surge is driven by expectations of interest rate cuts by the U.S. Federal Reserve, a weaker U.S. dollar, and persistent geopolitical instability. As long as these global conditions persist, they will provide a strong underlying support for gold prices everywhere, including Vietnam. Any significant shift in U.S. monetary policy or a resolution of global conflicts could, however, quickly reverse this trend, creating headwinds for the domestic market. Ultimately, the future of gold prices in Vietnam will be determined by the interplay between these powerful forces: domestic policy execution, global market trends, and enduring local demand. If the government's reforms succeed in boosting supply and the global rally cools, prices could stabilize or even retreat from their current highs. Conversely, if supply issues persist and global uncertainty continues to fuel demand, the golden fever could continue its reign. For now, investors and consumers alike are watching closely, aware that while the potential for reward is high, the market remains perched at a precarious and unpredictable peak.